Crude definitely continues to dampen the sentiment as far as the overall picture is concerned, overall market mood is concerned. Let's bring on board Ashutosh Khajuria of Federal Bank to talk a bit more about what lies ahead. Mr. Khajuria, hi, good afternoon and welcome on board. Foreign funds are exiting because of flaring crude prices, which has been turning up the heat on rupee. Is that a trend that's likely to continue all the way up until the election verdict is out or beyond that?
Yeah, I think if you just see the movement of rupee from December onwards, it has been strengthening, and that's more to do with the capital flows. There had been more than $10 billion that had come through FPI capital inflows. But at the same time, if you just see the impact of oil, it has again started playing. So now with, it's decisively crossing 70 and now in 70s, there is certainly a big hole in India's, CAD, kitty and all. So your CAD would have a risk of widening, and India being perennially an economy running a current account deficit, it's always compensated by the capital account flows, which decide the direction of rupee. So now with FPI being there from February onwards, and a major chunk came in March, we saw appreciation of rupee. But as soon as the flows stopped, and in the first week of April, we saw some outflows happening on both equities as well as debt side. There had been pressure on rupee, and it doesn't take time for rupee to suddenly depreciate by 1.5 rupee or so. So while it was at about 68.40 or so, today we see it's at 69.57. In just 4 or 5 sessions. So I think that's it.
Okay, so would you be of the view then that the rupee is going to be a tad bit volatile going forward, or it could rather weaken for going ahead into the year?
See, election is a big risk. Your monetary policy announcement is already over. Now, there are 2-3 more data points that would impact the currency. One would be the direction of consumer price inflation, CPI, and it's due on 12th. So if, like last reading, we saw an upward take of about 60 basis points from 197 to 257 in one go. So if that pace continues, then there are, inflation risks also looming over the already fragile CAD and fiscal front. So you have, certain so-called imaginative accounting taking it to 3.4% of GDP as fiscal deficit. Otherwise, it looks like, there is a slippage of about 20-30 basis points. So I think it's the reliance on national saving and various other factors through which, and the expenditure contraction that had been, that had enabled the government to still say that it's 3.4% of GDP. But I think once the results are out, of course, the new government, hopefully if it's a stable one, then it would have 5 years ahead of it. And whichever government, is in power, I think fiscal prudence would be their priority. Whether willy-nilly they'll have to go for it, else there is a risk of, rating downgrade. And now the position in which India is, an envy, for most of the other economies, the growth rate, the demographic dividend, all these things are intact. And in such a scenario, I think no government would like the fiscal to go out of bounds, and therefore there would be an effort in next couple of budgets, through couple of budgets, they would bring fiscal deficit to 3% of GDP, looks like. So I think if there is a continuity, then it goes without saying that they would follow this path. Even if there is a change, I don't see any government would dare to really go for fiscal profligacy. So, and as such, I think the currency would play depending upon what type of perception or what type of belief is there in the fiscal management. So currency would play accordingly, because that would bring capital.
All right, Mr. Khajuria, point taken. Thank you so much. Always appreciate getting in some perspective and insights from you on the various macroeconomic factors at play.